Hello everyone, welcome to today's session. So today we are going to start with chapter number 17. Okay, so before I proceed to the chapter number 17, any doubt in any of the topic that has been taken till now? Any questions on any of the topic, any doubt? Any topic? Remember review? We were talking about review, engagements on review. Yes or no? Or you guys are not revising? Okay. Now, when we will talk about due diligence, investigations, or forensic accounting, we are not talking about audit. Okay. We are talking about procedures where we are doing more than audit. It's not only about, some testing on sample basis. No. Here, there is hardly any sample basis because these activities are beyond sample basis. Okay. Now, if you guys have read through the chapter, if you guys have gone through the chapter that you must, okay, what is due diligence? Can anyone tell me what is due diligence or what you understand by the term due diligence? Anyone? What do you understand by the term due diligence? Am I audible, guys?
Yes, sir. Good evening, sir.
Good evening.
Due diligence is a evaluation of the business opportunity and verifying document and on the correctness of the asset, title dates like individual project, property like that, the environmental situation, how it is functioning, whether it is functioning right way with the right document.
Absolutely correct. Very good. Very good. See, when I talk about due diligence, okay, the term due diligence, that means you are going into a detail. It involves an analysis. You are doing a diligent analysis of the things. Now, due diligence can be because of a lot of topics. So due diligence can be finance based, can be tax based, can be we will see various type of due diligence. But when I talk about due diligence, is it something which you do a detailed examination of the material facts about the subject matter. Now here it is something kind of a scenario where you go in a lot of detail, in a lot of understanding of that particular transaction, of that particular subject matter. That is a due diligence. Now there are various type of due diligence. Audit, you have a tax audit, you have a GST audit, you have a statutory audit. Similarly, we have a various type of due diligence. We have commercial due diligence, financial due diligence, tax due diligence, information due diligence, legal due diligence, environmental due diligence, and personal due diligence. When I talk about commercial or operational due diligence, I'll give you one example. Okay. Let's say there are two car manufacturing companies, A and B. So company A decided to buy company B. Okay. Like they decided to get merged, or they decided to, acquire company B. Now, A was, let's say, passenger vehicle company, mid segment. When I talk about company B, again, passenger vehicle, but premium segment. They decided to acquire B. Before acquiring B, A decided to carry out commercial/operational due diligence. Now, what is commercial and operational due diligence? Commercial or operational due diligence means that how these passenger vehicles are being manufactured at B, how the operations of manufacturing are being carried out at B. What if tomorrow you come to know that the machinery which are there at installed at B are already obsolete? What if you come to know that they are not suitable for the future manufacturing activities, like they do not support the new technological advancement that is required in a passenger vehicle? Commercial due diligence, for example, from where they are purchasing the raw material. Let's say the company till now had 5 years of contract for batteries of car, which is manufacturing. Okay, so they were getting manufactured somewhere else and they were getting the batteries. Now this 5-year contract is expiring now. This rate at which the contract was negotiated 5 years ago was very cheap. Now it is almost 30 to 40% higher than the the rate that they were getting. So these type of questions are then understood in the commercial and operational due diligence. Whether operationally or commercially, the business is viable or not. What are the issues in that particular business? So they look after from the commercial, strategic, operational perspective of that particular business. Financial due diligence. Second one, financial due diligence. You can say that financial due diligence is you look into the financial matters of the company. Okay, financial matters of that particular entity which is going to be acquired. Tax due diligence. You look into the tax matters of the company. Information system due diligence. Can anyone tell me what is information system due diligence? What do you check in there? Quickly. Information system due diligence. Anyone? No? Okay. Sorry. So, information system due diligence basically talks about, we'll go back to our same example. Okay, A and B. Passenger vehicle and both passenger vehicle system. Now, what is the IT system used by B for production, for inventory, for warehousing, or for accounting, for payroll, or security, everything. So what is the IT system used for these things? Now, when they are going to merge, let's say A is going to get merged with B, okay, they should know that whether their systems are going to get aligned or not. Is it possible to merge the systems, or it is not possible? For example, A is running on ERP, let's say Oracle. Okay, A is running on Oracle, B is on SAP, S4. It is Oracle 12 or whatever version it is. Now the question comes is whether you will migrate B's entire system from SAP to Oracle, or will you migrate A's entire system from Oracle to SAP, or you will continue both. If you will continue both, how accounting will happen then? Are you going to employ some third system? Or are you going to use something different system to monitor security, cyber security, payroll? All these things are there which are answered when you do a information system due diligence. Similarly, you have a legal due diligence where you look into legal aspects. Sorry. Then environmental due diligence and personal due diligence. Personal due diligence looks into the personal policies, HR policies. Environmental due diligence looks into the compliance with the environmental laws, regulations, impact, and everything. Okay. So these are the various kinds of due diligence that we have discussed. And we will take one example, which is the financial due diligence to understand in detail. We will take the financial due diligence and we will understand in detail why and how it is required to be done. Basically, we will go why we are carrying out all these steps in the financial due diligence, why we are doing financial due diligence, and how it is done. Step by step, we will understand the financial due diligence, and then at the end, we will see a report of the financial due diligence. Clear? Okay. Now, let's say, for example, tomorrow I give you a particular task that you are, like, say, now a chartered accountant, and you get an assignment. Okay, that you got a company, company A, that wants to understand whether we should acquire company B or not, and for that, please help us to do a financial due diligence. You have been tasked to perform financial due diligence. Being tasked to perform financial due diligence of company B. What you will do? Simple. How you will perform that due diligence? What you will do? Come on, guys.
Sir, firstly, we will check that background of the company and its promoters, cash flow, and review of financial statements, accounting policy, any financial projection, how many years it's projected on the futuristic, and what are the statutory law follow-ups, taxation, accounting policies, and the HR policies, how it designed with respect to the employee that financial related matters. We will cover everything, sir.
Okay. Cover everything. But when it comes to the audit, you know that audit, you do planning. Audit, you do acceptance of engagement. Audit, you see a lot of things before even doing the due diligence. What about the due diligence? Are those things missing over here?
Yeah, firstly, we will have the engagement letter assignment. What are the areas which we are going to cover? Then
Okay.
audit planning accordingly. Then we will collect that, information from deep dive into the matters like financial statement, cash flow, and taxation, financial projection like accounting policies. All these things we will go in depth and get analyzed, and we will give the report out of that.
Okay. Okay. Anyone else or anything for? It's an engagement for you. Okay. And it's going to be, it will ever be, an engagement. Okay. Now, when I talk about due diligence, when I talk about an engagement, always and always, first we need to understand what is the scope of that particular engagement, what we are required to do in that particular engagement. When I talk about financial due diligence of what? Which entity? Now, that's where the major, important factor comes into the picture. Now, let's say, for example, you are going to do a due diligence of B. You have been appointed by, who will appoint you? Whether B will appoint you or whether A will appoint you. Who will appoint you? When you are going to do a due diligence for company B, okay, prospective company which is going to be acquired. So, which company will hire you for the purpose of due diligence? Anyone?
Sir, due diligence can be done. Who is going to acquire the company? He will appoint also. Otherwise, sometimes that the client itself, those who are going to give the company, they wanted to know what is the real position of the company to give the maximum price. In that aspect, also the either side they can appoint.
See, I'll tell you. Generally, what happens is when it comes to the due diligence, okay, it's not something that company B will appoint you. Always and always, company A will be the one which will appoint you. Now, but the scope and the subject matter are the books and financial data of company B. The question comes is, if let's say for example, if A is appointing us, can we go and look? Can we have free access of the books of accounts of B? Very good, Sanjay. So the person who is acquirer will appoint us to see whether it is worthwhile to invest in the company B. So if that is fine, if that is good to invest, then only company A will go and invest. Okay. Now let's say for example, company A is there. Now company A wants to have a due diligence. Closing means closing the deal, closing the entire transaction. And condition precedent means something that you have to close, you have to perform before you close the entire transaction. And the first and every time, the first and the foremost transaction will be a complete legal and financial due diligence of the company to be completed to the satisfaction of the investors. A complete legal and financial due diligence of the company to be completed to the satisfaction of the investors. Now, that means this term sheet, or you bring up any term sheet, okay, you bring up any term sheet, this will be the condition that a due diligence is required. And this is signed by both of the companies, A and B. Now, based on this, when A will appoint a due diligence person, a person who to carry out the due diligence, that document, this term sheet, gives the right to go and inspect the books of accounts of B. Okay, so the term sheet already contains the detail on the basis of which you need to do the due diligence. Sometimes this is still generic. This is still generic. Sometimes the term sheets, if they are appropriately drafted, it contains more detailed clauses on due diligence. Okay. Number one. Number two, you have been assigned to carry out the due diligence of company B. But do not forget, you are a chartered accountant. You are a chartered accountant. That means code of ethics is applicable to you. That means all the fundamental principles are still applicable to you, including the independence. Okay. And based on this, it is always advisable that before starting or entering into engagement, get engagement letter signed. Yes or no? So you need to get this engagement letter signed. Clear? Any doubt till now? Okay. Now, second thing, when let's say now we want to start the financial due diligence. What is the first step? Okay, what is the first step when you start the audit? What is the first step when you start the audit? Sorry. Anyone? After engagement letter, after agreeing the terms and everything, after this point in time, what is the first step? Yes, very good, Sanjay. Absolutely correct. If I ask you to break further, like what you do in this first step, Ayush, something before walkthroughs. Come on, guys. What do you do when you start your audit? Strategy, okay, Sanjay, but something, after strategy, the activity that you carry out. Anyone? The activity that you carry out. Very good, Sanjay. Yes, absolutely correct. Very good, Rohit. Absolutely correct. Yes, good. So you go and understand the entity. You go and understand the entity. Yes or no? Similarly, the first and foremost thing I will do in case of a due diligence is understanding the entity. I will understand the entity. So the first and important point in the financial due diligence is understanding the entity. Here I will use the target company because here it's not the entity. Here is not only one entity we are talking about. Here we are talking about target company, acquirer company, or investor company. Okay, there could be multiple companies involved into the picture. So we will specify understanding the target company's business. Okay, what you will understand in target company's business, anyone? What you will do when you want to understand the target company's business, what you will understand that in that quickly. What you do? Let's say, for example, if you carry out the understanding of the entity, what areas you will look into?
So firstly, we will see the nature of the business, where it is, whether it is a manufacturer or a trader or a wholesaler or the service industries or what kind of real nature, and the location of the facility, we will see it, and how many employees are involved, and how that finance is structured, the capital structure of the company.
Mm-hmm.
And also we will see the what is the promoter and promoter background also we will check it out, and the key managerial person and their nature, and all these things we will check, sir.
Okay. Anyone else? Something further to add? Yes, Sanjay. Business environment, industry which it belongs. Yes, very good. Nature of the business carried, whether service oriented or manufacturer. Yes, very good. Rohit. What else? So, business, environment, manufacturing or not, then product or services. Yes, product or services. Come on. Try at least something. Location of the entity, listed or unlisted. Yes. Now, coming to that particular part. Location of the entity. Why location? So, when I want to understand the target company's business, I will understand the, okay, whether what is the business activity. Okay, business activity, whether manufacturing, service, IT, what is the nature? Okay, then you will understand uh, listed, unlisted. So you will understand the structure. Then you may understand laws and regulations applicable based on the structure. Okay. Then you may understand the uh, entities environment, IT systems, IT softwares that the company is using. So IT softwares, IT system, environment. Okay. But before I go to the IT system environment, I will bifurcate the entire understanding of the target company business into two different categories. One, which is your external, which is your externally understandable matters. These matters are something you can get the information externally, or some matters which are dependent based on the external information. Okay. Source is external. Sometimes the source is internal. So externally or internally. One was laws and regulations which are applicable, listed, unlisted, structure, manufacturing activities. Okay. The next part is the location. Why I will understand the location? Anyone? Why I will understand the location? Have you seen anyone like location being important?
Yeah, location is being important in particular location. What is the tax implication? What is the labor contract? The availability of the raw material. See, so the location is very important to determine all these things.
Absolutely correct. I will add on that. So when I talk about location, it's not only from the point of view of the taxation, it is from the point of view of operations.
So,
Okay.
example, if the companies are running in the union territories and the normal union state, the tax rate will be different, and that
Yes.
like that.
Yeah. So location will not only impact your indirect tax, it will definitely do. But beyond that, there is another aspect to understand the location is operations. And third important aspect to understand the location is logistics. Okay. Why logistics? Reason because let's say car manufacturing company. This A has a plant in, let's say, UP. B has a plant in, let's say, Tamil Nadu. So strategically also, B can become an important investment for A, because now B can supply the cars directly from the plant which is there in the south. So no need to supply the cars from north to the south of India, from UP to Tamil Nadu, rather than to manufacture over there. So these type of locations becomes very important. What if instead of Tamil Nadu, it has two plants in Tamil Nadu and in Northeast? And setting up a business or a manufacturing plant in the Northeast requires a lot of licenses. So they already have that. That's an added advantage. You can get your manufacturing activity ready from very next day without investing your time in getting the licenses, because someone has already done for you. So the location increases the value of that particular business. Logistics, operations, and then the indirect tax. Yes, sometimes you get a very good concession in the tax if the entity is incorporated in the northeastern region, in the SEZs, in the IFSC. So the taxation provision changes. That's why the location becomes very important. Then what else? Apart from location, which areas do you look into? So business, structure, laws and regulations, location, what else? Anyone?
So the employment, which means that supply wage level, is there any union is formed, or how the function that post-employment benefit, or is a retirement benefit?
Okay. But don't you think it should be part of a later stage review rather than understanding the entity? Why understanding the entity requires to look into the employment?
Because it involved money, right? Because if we are doing that financial due diligence, it involved money, right?
No. So first we are looking into the perspective of understanding the business. We have a subsequent areas where we go into the review of financial statements. Why not to take up this particular point of employees at the time of financial statement, and to take this point as of now?
Yes, sir. We can move to there, but okay, sir. The another point is that the reputation of the business.
Reputation of business. Okay. Okay.
And
I I will still write employment. I'll tell you why.
employment will involve the location as well. The location to location.
Employment is still relevant from the location's point of view. What if your activities, manufacturing activities, are kind of where you cannot find this kind of skilled labor somewhere else? Okay, so this skilled labor you cannot find somewhere else, and that's why location and employment becomes important. For example, there are now labor codes, the new labor codes which are there. Now, before shifting your entire factory, you need to look into whether it is permissible under the law or not. So let's say if company A is planning that, okay, once I will acquire B, I will close the northeast plant and will shift somewhere in, let's say, Gujarat. Whether it is permissible by the law or not, for that, first you need to understand what is the location with respect to the employment, from where major of the employees are. Okay, and that may create the sorry the legal complications from the employment point of view. Okay, reputation, very good. Reputation or market image, goodwill of company. Okay, goodwill of company, name of company, how popular the brand is, how much premium the brand is known, what is the market share of that particular company. So brand, market share, a lot of things I will look from the market standpoint. How the company is perceived in the market. What else?
And the inventory also, location wise, the inventory will be stored right in warehouse or
Yes,
for the raw material for the input purpose.
yes, inventory location. Where my major inventory is lying. Very good. Now coming to the next areas, which is I would kind of say I would get the information internally. I would get the information internally. Anyone? Understanding the business, still understanding the business. I'm not deviating from that.
KMPs,
Means,
the managerial person who is involved on the top management
yes, organization chart,
organization.
organizational chart or structure.
Or under roles and responsibility of the each board.
It will form part of organizational structure. Organizational structure. What else? Internally, information systems. Information system. Yes or no? IT. Then internal funding processes. You can yes say yes processes.
Operating process.
Operating processes. Then like my plan capacity and all those things. Yes, very good. Important contracts or projects which are running. Important contracts and projects. So let's say I have a very important contract. For example, this one, battery one. This battery contract, I had a 5-year battery contract with a supplier. Important. Okay. Research and development. There is new R&D happening on a particular new type of engine. Petrol engine, water engine, whatever you call it. IP. Yes. So, IP, then contract process.
Major expenditures.
Major expenditures, yes. Yes, major expenditures. But major expenditures, when you see now, that only gives you a good understanding of identification for these areas. Whether do you have a R&D, why the company, let's say for example, if the company is getting, some other kind of expenditure and lack of qualified staff, business may struggle to scale, handle professional export clients. Opportunities, entering into export market, potential expansion of new revenue streams. But the threat is, again, US market is down. Hypothetical example. External economic factors could turn new loan into NPA. Quickly, NPA. What was NPA? Clear? Okay. Now, let's talk about the second part. After understanding the target company, what you will understand now? What is the second step?
Accounting policies.
Accounting policies. Now, why accounting policies? Why it is important for me? That after understanding the entity, I'm directly jumping to the accounting policies. Why? What is so important in this accounting policies for me?
Sir, one of the important Assumption is that going concern consistency accrual concept. The accounting policies will play the major role. The reason is that if the accounting policies, the target company, whether it is applied consistently or not. If there is change in accounting policies, why it is changed? For because of the due diligence or some sale is going to happen, that reason they changed the accounting policies. What is the impact behind it? That is the reason it has to be checked. It has to be seriously reviewed whether the recent changes in accounting policies, why it is suddenly they changed the policies rather than the last year or prior to last year like that. What is the rationale behind? That has to be checked out. Because of the
Okay.
accounting policy itself, it will turn into the negative to positive or positive to negative in various ways and means, including the disclosures.
Yes, very good. See, when I talk about accounting policies, why it is important? Reason, because I'll tell you. I'm talking about mergers and acquisitions. Now, the effect of these accounting policies, let's say when I'm merging it, I have to make sure that accounting policies are consistent, are consistently applied after merger. Okay. Now, sorry, are consistently applied after merger. Now, for that, I need to first understand what are the accounting policies. So, after merger or acquisition, there could be a change in accounting policies. Okay. Why? To make sure the consistency is there. Yes or no? So now to make sure the consistency is there, I may need to change an accounting policy. And because of this particular change, there could be an impact on change of accounting policy. Now the question comes is that impact is fine, but sometimes identifying the impact becomes a problem. See, if you have the data available, you can identify the impact. But when you don't have the data available, identification and assessment of the impact becomes very difficult. At that point in time, what hit you will take in your books of accounts? That becomes a question. And now, let's say, for example, if the resultant company after the merger or acquisition, the company which is surviving is a listed entity, a hit on your bottom line, decreasing your quarterly net profit will definitely impact your share prices, market capitalization. So, don't you think it becomes a very important area because this is going to directly impact my profitability without impacting the operations? If I just change the accounting policy, I may have to reverse a lot of revenue which is booked. I may have to book the additional cost which might not be booked. That's why it is a very critical area when it comes to the accounting policy. Why? Because it will have a good impact on your financials without any impact on your without being any impact on your operations. So your manufacturing, let it be same. Your warehousing assets, everything be same. But if your accounting policies are incorrect, you have to rectify them, and without any impact of your on your operations, you will still get an impact on your financials. So all the material changes in the accounting policies are required to be appropriately assessed if there are any changes required. And based on that, you need to, in a lot of due diligence, It's not only about the accounting policies that are present in the company, but a lot of times due diligence guys also reports on the accounting policies which are not in line with the practice of the industry. Okay. And that means that when it comes to the due diligence and accounting policies, I not only report on that whether this particular accounting policy is as per the accounting standard or not. I may also report that whether this is in line with the practice followed in the industry or not, because sometimes it's not only the accounting standard but what practice is being followed in the entire industry. And that becomes really important. And sometimes I may also report the deviations between the accounting quality or accounting policies of the investor and the accounting policies of the acquiree, the particular entity being acquired. Okay, so this will then help the investors or acquirers to understand what changes are required after mergers with respect to the accounting policies. Clear? Any doubt? Any doubt? Okay. Now, the next thing after accounting policies, what you will look into? Which area you will look into?
Financial statements.
Very good. Financial statement review. Okay. Let's say now you want to perform the financial statement. How will you do it? What you will do?
Financial ratio analysis, and is there any asset overvalue of asset, or any liabilities are hidden, or liabilities are understated?
Mm-hmm.
What are the estimate assumption? See any estimate of accounting, whether the assumptions, hypothetical assumptions and policies, all these aspects, whether it's appropriately applied by the management or not.
Okay, yes. What else? Why financial? What you will do in the financial statement review?
First of all, whether that company is prepared in accordance with the applicable financial framework or not.
Mm-hmm.
What is the relevant financial reporting framework?
Mm-hmm.
As per the
Yes.
relevant financial reporting framework, the entity is prepared the financial statement or not.
Mm-hmm. Okay. Anything else?
Then we will check any abnormal activities current year, that the income is particularly the extraordinary or other business, or is there any discontinued operation?
Okay. Yes.
That is segment operation also we will see which segment is throwing more income or loss.
Okay. Yes. What else?
And also we'll see the going concerns assumptions, that is very important in the foreseeable future rather than operation. That
Yes.
financial projection also we will see. Cash
Okay.
flows. Cash flows also we'll look into it.
Okay. Okay.
From book for PC.
Let me tell you. So when I talk about financial statements, okay, when I talk about review of the financial statements, what we are required to review and what we are required to do, well, we will discuss in detail now. Okay. And I will take up a question for you on this similar topic. And then on the basis of that question, we will discuss what we are required to do with respect to the financial statement review. Okay. So let's take a question also. Hmm. So I will read the question for you guys. Let me see if the white is shaking. Let me share the sound. Let's read the question.
Omega Pharma Limited, a listed entity, is in the advanced stages of acquiring Beta Wellness Pvt. Limited. The acquisition price is heavily dependent on the net worth and the operating profitability of Beta Wellness. The board of Omega Pharma has appointed CAS to conduct a comprehensive financial due diligence.
Okay. During the initial briefing, the CFO of Omega Pharma expressed concerns that the financial statement of Beta Wellness might dress up the figures to look attractive for the sales. He specifically requested CAS to verify if the reported profits are sustainable and if the net worth reflects the true realizable value, devoid of any hidden obligations or inflated asset. As CAS outlined the procedure for the review of financial statements, specifically the detail the steps to evaluate the operational results, specific areas to scrutinize for the hidden liabilities and overvalued assets to ensure the net worth is accurately done. So here in this question, there is a company called Omega Pharma Limited. That company has appointed CAS to conduct a financial due diligence of Beta Wellness Private Limited. Now, CFO of Omega Pharma is concerned that we might be provided, inflated numbers. So for that, we want to review the financial statement to ensure that the numbers are not dressed up figures. Okay, the numbers are not overvalued figures. The numbers are not something which is inflated. For that, we need to carry out the review of financial statements. So the review of financial statements is not only from the point of view of, you can say, the profitability of the current year. No. The review of financial statement, we may carry out a review which is beyond 1 year. The trading results of the past 4 to 5 years. Trend analysis. So when we do a trend analysis, we may take up last 4 to 5 years of financial statement. We may review last 3 years of financial statement to understand whether the number are dressed up or not. We may take up ratio analysis. First, to understand what is the trend in the financial statement, what is the trend in profitability, what is the trend basically sorry, what is the trend basically with respect to the profit, the capital. Okay. Then it comes, the second step comes is that after the trend, okay, we may go and check for the hidden, sorry, we may go and check for a hidden liability. Why hidden liabilities? liabilities which are not booked but they are there. For example, litigation was going on. We have received a demand. It's nowhere in the books of accounts. There is a case on the company on which there is a court order that the company has to pay the amount to the customer back. Nowhere there in the books of accounts. There is a contract on which we have to pay a huge amount to a particular vendor. Nowhere mentioned anywhere. Number 4, you can say a customer for which we took a contract, but we did not meet the quality standards or we were not able to supply the goods on a timely basis. There's a penalty on the company for not meeting the targets of the customer. In construction contracts, it's common that when there is a construction, when the particular vendor takes up the construction for a customer, if you do not complete the construction on time, there is a penalty that is charged on you. So hidden liabilities which are not booked, or for example, cost in case of the construction cost, a lot of times material and a lot of things are already issued on the site, but invoices are yet to be received from the suppliers for which the cost is required to be booked. So what are those hidden liabilities that may change your entire financial statement? Second, overvalued assets. Why overvalued assets? Reason because these both things will directly impact your net worth. What is net worth? What is the formula of net worth? What is the formula of net worth?
Sir, net worth we can arrive the two ways: the capital and net own fund.
Generally, we go for total assets minus total liability excluding the capital.
Yes, sir.
Okay. So generally, it is total assets less total liabilities excluding the capital and some adjustment for the deferred revenue expenditure or assets which are required to be write off, P&L, debit balance, whatever. But usually it is total assets minus total liabilities. If your liabilities are not booked, if your assets are overvalued, do you think you will get an appropriate net worth? Your net worth will be entire fictitious, made up, dressed up, good looking. So, as a result, it is very important. First, I checked whether there is any missing liability, hidden liability. Now, the second element of the net worth is whether is there any overvalued asset for which I am paying extra. Because in the case of merger or acquisition, you are paying the price. Yes or no? Sale consideration for acquisition of that particular company. And what is the sale consideration? How do you determine the sale consideration in case of mergers or acquisition, amalgamation?
Yeah, we will see based on the net worth only.
The things you are getting in return. So, if a company is having a net worth of, let's say, 500 crores, you will pay for 500 crores only. You will not pay more than that. You will not, pay less than that. You will pay that amount. What if the net worth is made up of? Is the things which are there in the net worth are not appropriate. Hidden liabilities, overvalued assets. It will become a problem. Yes or no?
Yeah, it will leads to overvalued. Net worth
Yes.
will be overvalued, extra paid.
Can anyone give me an example of overvalued assets? Overvalued assets.
Sir, investment which shows that no return, not paid. So for that also we done some provisioning, right, for investment also. Investment which are carrying very less, but still they are showing the more value on it.
Okay. Investment
And
which is not shown on NRV. Fine.
yes. And for the intangible assets also there is no value, but if they are showing again, like
Okay. Intangibles.
the inventory which is obsolete, but still they are showing it.
Again, inventory not recorded on NRV. Very good. Cost or NRV, whichever is less, we need to record. And if not, then yes. What else? Obsolete plant and machinery.
Yes, sir.
Non-recoverable datas or trade receivables, which are not going to be, recovered. Companies are gone, bankrupt, insolvent.
And also that debtors balance, which is more outstanding, is more years, say example over than 3 years or something, which
Yeah, which
they
is you will not collect it. You are not
are,
able to collect it, or which are not collectible.
the collectibility issues is there, but
Yeah,
still they are showing it the good.
good. Yes. Litigated assets and properties. For example, there is a property which is under litigation, which is there are high chances that it is not going to end up in the company's balance sheet or in the company's name, but still being shown. Assets which are shown at the higher value because of the foreign exchange fluctuation capitalization. So I bought a machinery from outside India. Just because of the foreign exchange fluctuation, I capitalized that machine on a very higher value. Let's say I got the delivery late. Okay, I paid an amount late. Instead of, charging to the P&L, I charged to the machinery. I capitalized that foreign exchange fluctuation to the machinery when it was not required to be done. Or some expenditure done on in foreign currency after installation of the machinery, maybe repair and maintenance, I capitalized it. So things which were not required to be capitalized are capitalized to show higher value of plant and machineries. Recoverables which are not actually recoverable. For example, I have shown that the company is required to recover, company has to recover this much amount from these person, which in actual there is no contractual obligation on those parties to pay to the company. So fictitious or fraud recoverables. So there are these things which we talk about overvalued asset. You need to understand which are the overvalued asset, so that at the end you can now talk about whether your net worth is appropriately determined or not. So basically, if I summarize the points, then first you will see the compliance and the deviations with respect to the financial statement, with respect to the financial, applicable financial reporting framework. What is the applicable financial reporting framework? What are the laws and regulations governing the target company's financial statements? Okay. Then you will go for the operational results. For example, evaluation of profit. You may perform like, okay, what is the profit after tax? What is the profit? Extraordinary items in the profit which are included. Comparisons, you may perform the trend analysis with the budgets, with those of previous accounting periods. Okay, trend analysis, benchmarking with the others with the similar company. You will perform the review of operating. Then you will do the assessment of the net worth, hidden liabilities, overvalued assets. And by this way, you will advise whether the financial statements are good or not, or what is the scenario with respect to the financial statements of the particular company. Clear? So review of financial statements. If I go to the study material, see, again, this is the point we were discussing with respect to the review of financial statements. Let me zoom in for you guys. Okay. Review of financial statements. So we discussed about framework for the presentation and preparation of the financial statement, applicable financial reporting framework. We discussed about operating results of the company. We discussed about the extraordinary items, okay, which is there in the profit and loss account. results which are a comparison, like, we compare the 4 years returns, like what are the returns companies providing, positive return, negative return, okay, normal operating profit. We may compare the benchmark against the similar companies, okay. And on the basis of that, then we will do the net worth analysis of the business. For example, hidden liabilities. For example, again, overvalued asset, and you have a very good examples over here of hidden liabilities and overvalued asset. And this is how you will perform the review of financial statements. One step in the financial due diligence. So we have covered accounting policies. We have covered brief history of the target company and promoters. So brief history, accounting policies, review of financial statement. Now we need to cover taxation, cash flow, financial projection, management and employees, and statutory compliance to understand the entire financial due diligence. Clear? Any doubt till now? Any doubt? No? Okay. If no doubts, what I propose is let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Let's take a quick 10-minute break. This was the review of the financial statement that the last we discussed. Any doubt anyone has till now with respect to the areas that we have discussed already? Any doubt? No? Okay. Now, going to the next area, that is the taxation part. How to perform the due diligence of the taxation from financials due diligence perspective. I'm not doing the taxation due diligence. I'm doing the financial due diligence. Now, why do we have a tax part in the financial due diligence? Anyone? Why we are doing the financial taxation part as a part of financial due diligence? Anyone? So basically, understand one thing. We are talking about financial due diligence. Okay. We are talking about full-fledged financial due diligence. Whether the question is, do you think that tax impacts the financial position? Whether tax impacts the financial position? Yes. Very good, Sanjay. Yes, tax impact the financial position. Then why we will not include it? So the taxation part, although there is a separate taxation due diligence that we have seen, but because tax also impacts the financial position, we have to do a taxation due diligence. Tax due diligence in the financial due diligence. So here we look for not only the financial impact of taxation, like what is the direct tax, what is the provision, how much tax company pays, tax rates, all those things. But we also see tax impact of merger.
Honey book for PC.
Okay, tax impact of the merger or acquisition that is happening. Are we allowed to set off or carry forward the loss? Will it reduce our future liabilities? MAT credit lying with the company which is going to be merged. Can we use that? MAT credit, brought forward losses, unabsorbed depreciations, how those will be carried forwarded in the new company, what benefit we will get, all those things. So the tax impact of the merger or acquisition will also be part of your taxation aspect. What else you will check in the taxation aspects? What else you will check? Come on, quickly. What you will check? Quickly, guys. In the taxation aspect. The regularity of the tax payment, yes, very good. Tax payment, what else? Anyone? Whether taxes are paid as per the provision, okay. Will you not check the outstanding liabilities? Open assessments, search cases, pending assessment. Yes or no? Pending litigations, tax litigations. So pending litigations, assessment, open liabilities, okay. All those things will be looked into. So that is the taxation part. Short, sweet, but very important from the financial due diligence point of view. Then comes the cash flow. What you will see in the cash flow? What you will see in the cash flow? When it comes to the cash flow related due diligence, what you will look into? Operational cash flows, yes, very good. What else? Apart from operational cash flows, what you will look into? Anyone? Whether supplier payments are made in time. Okay. Supplier payments. What else you will look into from the cash flows point of view? No? Yes? Okay, let me tell you. Proper utilization of funds, funds flow management. Yes. See, when I talk about cash flow, there are three important things I will look into. One, how good the company is at managing or generating the cash flow. Whether my business is able to generate the cash flow, or the business of the company which is getting acquired, whether they able to generate the timely cash flow to meet the needs of working capital. See, there are two sources of working capital. One is the internal cash flow that you generate, the company generate. Second, you seek the external help. Okay, working capital facilities that you obtain from bank. So, what is the sources of the working capital that the company is relying on? Whether they are the internal funds generated through the operational cash flows, inflows, or it is the external fund because company is not able to realize the cash quickly. There is a huge delay in the realization of the cash. So how the company is financing the working capital needs? Because that attracts a cost. If I take a working capital facility, if I'm relying more on the working capital, I have to pay an amount of interest for the utilization of the working capital. And it shows that the processes are not efficient to realize the cash, or the nature of the business is such that you cannot get the cash very easily. So one is how the company is financing the working capital, internal or external. Number two, what is the cash turnover cycle? What is the cash cycle? Inventory cycle, data cycle, like how quickly the company is able to turn data into the payment, data into the cash, okay, inventory into the sales. How quickly then company can rotate the cash. For example, a lot of companies are cash rich. That means they do a lot of things, they can generate the cash, but they are then not able to appropriately channelize the cash. That means they have a lying, unutilized cash balance with them. A lot of companies, they sit on the pile of cash or bank balances with them because they then don't know how to utilize that particular amount in the working capital. Okay. So cash utilization. When the cash comes, how quickly it is utilized. Whether the company sits on the piles of bank balances and then gradually they release on some amount, or whether they are into quick that okay, funds are there in the bank, let's quickly release it or place orders, do something, and then channelization of the cash. How much time the cash remains in the books. Third, the level of the liquidity that company maintains. Sometimes some companies maintain at least 6 months of cash for cash working capital requirement. Sometimes the company maintain 3 months. Sometimes some go for shorter period. So what is the minimum company level at which the company is maintaining the cash or the liquidity? What level of liquidity company chooses to have in a particular given point in time of a year? Let's say, for example, some business are seasonal. So company may accumulate cash before the season starts so that they can, utilize the liquidity in the seasonal months. So is this something how happens like, okay, in a given particular set of a year, in first few months, you will not see a good amount of liquidity, but later on you may see a good amount of liquidity. So you need to understand the cash cycle of a company. So cash flow talks about basically sources of the working capital. Number two, utilization. And the third, it's the resultant of the both. Like one is the source, second is the utilization, the remaining is the liquidity. The level of liquidity that the company maintains. Then in that you do the analysis of the operational cash flow, investment cash flow, financing related cash flow, all those things. Clear? Any doubt? So if I take you through cash flow, so historical cash flows with their patterns, okay, that we see. Cash requirements, how the company is meeting the cash requirement, internal accruals or external help, the source we are talking about over here. And then utilization, is company is able to meet its trade payables, how the utilization is happening, trade receivables, inventories. And then it comes the historical cash flow pattern or the cash balances it has. Deploy funds, again utilization. And then the resultant of source and utilization is nothing but the liquidity you have on your hands. Clear? Any doubt? So are the funds lying idle? Okay, or company is able to reap maximum benefits out of the funds, investment pattern, these things, source, utilization, and the liquidity. Clear? Any doubt? Okay. Now the next part is financial projections. What do you do in financial projections? When you do a due diligence, why financial projections are important? Why do you go for financial projections when it comes to the due diligence? Anyone? In the financial projection. Okay. So for your understanding, I will refer to as of now SAE 3400. Similar to that, you need to understand the assumptions. Management and employees. Okay. Management and employees. You need to understand the management, the employees of the company, employee makes, from where they are, all those things. We already discussed that as a part of the brief history. Okay. And then the statutory compliance. When I talk about statutory compliance, it's the corporate compliance, all the returns, all annual compliance that the company requires, whether they have done it or not. If not, then what are the penalties, whether those penalties are appropriately provisioned or not. Okay, so the regularity in the statutory compliance. Clear? So this is how basically a financial, full-fledged financial due diligence is done or is conducted. Any doubt till now? Any doubt? Any doubt? No? Okay. If no doubts, then let's understand. Now we understood the process of the financial due diligence. What we are required to do in case of financial due diligence. But now we need to understand one more thing. Okay. That is basically how a due diligence is carried out. Okay. Overall structure of the due diligence. See, when we talk about due diligence, it's simple. It's something which is similar to the audit only. That first you do the planning, then you perform the particular work. Okay, perform or execution happens. Then you assess the, let's say in audit, first you do the planning, then you execute, okay, or you perform the audit, then you evaluate the results, okay, and then basically you again go and check whether any further, audit procedures are required to be performed or not. Once you have sufficient and appropriate audit evidence, then you provide the report, and at the end, you submit that report. Yes or no? That's the part of audit. Similarly, we have our due diligence also. Define, that is pre-planning kind of thing. You need to define what kind of due diligence you are doing. Okay, what is the basic of the, your scope? You need to define your scope. Then comes the important cycle of the due diligence. Okay, this is known as the 4D cycle of the due diligence. Now, what happens is, first you discover the subject matter. If it is financial due diligence, you do the understanding of the financial due diligence, like what are the things, each and every area. Then you diagnose. Diagnose means you understand the things you have identified. Cash flow not appropriate, financial review, hidden liabilities, overvalued assets. You diagnose those things. You correlate everything. Okay, delivery. That is, you continuously prepare the report. And on the basis of that, design. That means you design the procedures. So it's a continuous process. Design, delivery, discover, diagnose, design, discover, diagnose, delivery, design, discover, diagnose, delivery. So it continuously runs this process till the time you have an appropriate output. Once you have an appropriate delivery output, you then defend that. Defend means you present that to your client who has hired you. Hey, they may ask you questions on the due diligence. You need to reply to them. You need to answer to them. That's defending. That's the outcome. This is how the due diligence is carried out. Okay. Now, along with this, let me show you one. Let me see if I can get you one due diligence report. Okay. Because see, again, due diligence reports are not publicly available. They are not easily available basically for what you can say for public domain. Okay, very limited due diligence reports are available to the public domain, and those which are available are basically kind of, you can say, not that good one, but still I will show you some due diligence report which are there, which are available in the public domain. Just a minute. Now, this due diligence report is as per some of the foreign law. Okay. Again, it's on the different topic. But what we will do is, we will understand the structure of the due diligence report, not the content. We will not go on the content of the due diligence report. We will use due diligence report, these reports, to understand the structure of basically, you can say, how it is drafted. Okay, what are the sections in a particular due diligence report? I have, yeah, I have one due diligence report of 2024 from the McKinsey. Again, publicly available data, you can go and check. Okay. Second is one of the care ratings report. Again, it's a due diligence report of 2016, but still good. Okay, of a particular company, publicly available data. Okay, not something you can easily get it. There are other also due diligence report, which are, you can say, social due diligence report, project related due diligence reports, various due diligence report, ESG related due diligence report. Okay. So there are various due diligence reports which are available. Okay. As an example on the net, but not the Indian financial one, that they are not that much available. Okay. So when I talk about the due diligence, basically report, how it is drafted, the structure is that you start with the executive summary of the report. You have the executive summary of the report, first of all, that what is there in the report, what is you have done. For example, over here, if I talk about here, you have a brief snapshot of the entity, kind of executive summary. Okay, what they have identified, what they have not. Okay, so executive summary, brief snapshot, same kind of. Then you have an introduction and background of the target company. I'll just show you one. This is introduction and background of the target company, which is the particular company for which the due diligence is done. When it was incorporated, where it is incorporated, the location, all those things, the business, everything it is there in this particular target company or the introduction of the particular company. Then you have the objective of the due diligence, terms of reference and scope of verification. Now, in this particular report, you already have this objective of the due diligence and everything on the top. Why this due diligence is done. Like this is the particular entity related due diligence. Okay, so that is there. Otherwise, like, sorry, yeah. Otherwise, it is not specified other type of due diligence because it's a specific type of report. Okay, but usually you specify the purpose of objective of the due diligence and the terms of reference from where the scope of verification. Like, what is your scope? Why this due diligence is carried out? On what thing this due diligence is carried out? Okay. This helps the reader to understand what is the purpose of this due diligence. Why this due diligence was carried out? What was the basically, the subject matter over here? Sometimes in due diligence report, they actually also provide what you can say, the methodology, how the due diligence was carried out. For example, over here, if I show you the policies and procedures followed to carry out the due diligence. Okay, this is the description of supply chain, whatever is covered under the due diligence. For example, professional advisory service, travel service, all those things which are covered. Okay, so what the scope of the due diligence and how it is being carried out. Then comes the brief history. Again, if you have already have background of the target company, fine, you can refer to that. But there is no point of doing duplication. So you are not required to duplicate the information in your report. It's not about just, providing the information again and again. No, it is about basically, providing the relevant information at relevant places. Then you provide the shareholding pattern. Who holded what and what is there with respect to the promoters, who are the founders of the company, the way it is there. Details of key promoters, their age, destination, years of association, handed responsibility. A lot of things you specify about the promoters, key managerial personals, okay, board of directors, then their details, everything. So you comment on that. Then you have an organization structure. Okay, who reports to whom, what is the organizational structure, chart and everything. You provide that. Ownership structure, shareholding pattern that we are talking about, who holds what. So share in business, all those things. Okay, so shareholding pattern that we provide. Observation on the review, your comments. Management structure that we saw. Then you comment on the financial liabilities. Okay, but here, like one more area, which is group companies, related parties, how the group company is structured, all those things. Then you comment on the hidden liabilities, current asset, financial positions. So see, here we are talking about now financial performance of these companies, of the group companies. You're talking about business profile analysis, operational review, where you specify about, okay, what they manufacture. Okay, these are the components, these are the things or products they manufacture. Your comments on that, you provide your comments. Okay. Then revenue analysis. This is how the revenue year on year, FY12, 13, 14, 15, 16. Again, your comments like diversified product, concept of refine, whatever it is. Okay. Then you have a country-wise revenue breakup, state-wise revenue breakup. In GST, it is very important to understand your comments that it supplies produce in the domestic market, mainly Maharashtra, Gujarat. Okay, primarily exports to these countries. Project details, like what they have, the operational project, like is there any project which is, in development? For example, remember we discussed about upcoming manufacturing plant in Northeast or something like that. So similarly, detailed cost of the project, estimated cost incurred till now, cost that will be incurred in future, the means of financing of that project, all these, if there is any project going on. Okay. Then you have a financial liabilities, valuation of assets, your comments on them, lease, operational results we saw, tax and statutory liabilities, the areas that we have seen. Okay. Account of litigations, any litigations or legal proceedings, all those things, net worth, financial obligations with group companies, associate companies, SWOT analysis that we have seen. So all these things, and then future projections, your comments on that, and all those areas that we have seen till now. If then required, suggestions on the way and means to include, okay, on respective topics, if any suggestions are required to be included. Suggestions on various topics taken care before and after the proposed mergers or acquisitions. So all these things are required in your report, the way you do the due diligence. Okay. So we will discuss this. Let's say supplier profile, from where the goods are coming, from where it is purchased, who are the major suppliers. Okay. Supplier side analysis, average creditor days, raw material availability, ample. But I'm just showing you some examples, okay, which is there in this particular report. Okay. Industry analysis, which is the industry, product portfolio, level of competition, domestic consumption, diversified industry, a lot of things you analyze. Investment policies of the company. Remember accounting policies, other initiatives. Future prospect and investment opportunities. Then site visit reports, physical verification, manufacturing. So for example, you want to visit the plant because you will do physical verification. Otherwise, how will identify whether the assets are actually present or not? Okay, site verification, all those things are there. Financial performance, revenue analysis, again. Then you have all these things of various different expenditure analysis that has been done, depreciation, financial performance, balance sheet, asset wise. Okay, your comments, you provide comments if required, inventories, okay, sundry datas, analysis of the data, all those things are there. Financial performance, balance sheet, liability side, every liability wise comments which are there, details of the related party transactions. So a lot of details are there in your due diligence report along with your comments. So you provide all the details that you do, not like the audit report. Audit report, we have the paragraph fixed. In the due diligence report, you can add details which are relevant, which you want to report. It's not something which is restricted. So the due diligence report will depend upon the subject matter which is there for the due diligence. For example, this one. If I talk about, this will also contain some different analysis because the subject matter is different. Okay. Here you will have a different kind of due diligence report, different kind of structure. But the thing is, it's on the subject matter. Now, this is very short one. This is a very detailed one because it is financial due diligence report. Okay. Bankers and auditors due diligence. And key findings. Company comments and whatever the person who has performed the due diligence, their comments. So this is how the due diligence report is drafted. Okay. Any doubt with this? The structure of the due diligence report? Any doubt? Basically, due diligence report are very, I would say, not easily available. Okay. They are a public available data. It's not like that it's not available. It's publicly available, but they are very limited. So, based on that, if the subject matter is different, for example, taxation due diligence, if, for example, ESG related due diligence, the report structure might change. Okay. So you may find some different kind of report structure, but this is something, an example of the headings that you are required to include in a due diligence report. So that was your due diligence. Any doubt till now with respect to the due diligence or any part of the due diligence? Any part of the due diligence? Any doubt? Okay. If no doubt, then our next part that we want to take up is investigation. Investigation. Now, this is different than the due diligence, and how? Okay. When I talk about investigations, I am looking into the inquiry of the facts. When I talk about the investigations, I am talking about looking into the facts, inquiry about the facts. The outcome of the investigation, okay, whether that has happened or not, that is something we need to establish. I go to the books of accounts, I go through each and every detail in at a minute level to provide that, okay, what is the outcome, like for example, whether this transaction has happened or not, that I will investigate. Okay, here my evidence is conclusive. That means it is not if but reasonable anything. It is perfect, 100% evidence I am giving to you that yes, the investigation says that has happened, means that has happened. The objective of the investigation is on the fact finding, whether a particular item has happened or not. Okay. When I talk about due diligence may have a wider subject matter. Financial due diligence, do everything, check everything. When I talk about investigation, it's specific, it's to the point, it's precise what you want to investigate. I cannot investigate the financial statement. So no one can hire a person to investigate a financial statement. Like, okay, go and do the investigation of the financial statement. What to investigate? Don't know. But investigate something in the financial statement. No, it cannot be. You can hire a person or hire a professional to investigate into the particular facts of the financial statement. For example, whether is there any money laundering, whether is there any evasion of tax, whether there is a hidden liability. I cannot hire for a general investigation. General investigation is what? Like which is not, specific, not precise. That is not an investigation. Investigation is a fact-finding exercise, fact-related. At the end, I need to comment whether it has happened or not. Either yes, either no. But then, at that point in time, the subject matter should be precisely defined. Then only you can do the investigation. Okay. Now, can anyone give me three differences between the investigation and audit? Three differences between the investigation and audit. Come on, guys. Give me three differences between the investigation and audit. Come on, guys. Three differences between investigation and audit. Anyone? No? Okay. Audit is an examination and evaluation of the FS. Investigation, in-depth examination of a fact. Okay. Anyone else? Okay. If I talk about investigation basically aims at fact finding, whether the particular fact has happened or not. The audit's objective is to true and fair, whether the financial statement reflect true and fair view of the state of affairs of the company. Scope of investigation can be statutory, can be non-statutory. We will understand the statutory and non-statutory investigations. But the scope of audit is wide enough. Okay. The scope of audit is let's say, for example, statutory audit. You know the scope. Periodicity. Audit can be carried quarterly, half-yearly, yearly, based on the requirements. Periodicity of the investigation, not fixed, when required, as and when required. Timing of the investigation. Timing means in how much time I need to complete the audit or investigation. So timing, if I talk about audit, you need to complete the audit. There are due dates. Before that, you need to complete the audit and submit the audit report. Whether it's a statutory audit, whether it's a tax audit. In case of investigation, it's not similar. Okay. So in case of investigation, basically, it is different. Investigation doesn't have any due dates or timeline. It may take years. And there are multiple investigation reports which are, basically, investigation can happen statutory, can happen non-statutory, and investigation can be on a lot of things. Can be on one particular matter. A lot of type of investigations are there. Okay. And investigation report, financial investigation reports, if I talk about, basically, they are very not publicly available because these documents are not publicly available documents, financial investigation reports. But still, I have a kind of financial investigation report for you guys. Okay. Oh, just a minute. GTR. So we will discuss one financial investigation report side by side, so that you can understand what and how investigation works. This is the investigation reports in the matter of market manipulation using the GDR issues. Now, this is a very high level investigation report. Okay. Again, this is related to some market related done by the SEBI, publicly available domain. Okay. However, this is an old investigation report, but I will discuss this reason because it's very good drafted. So you will understand how detailed the investigation report is, how critical and how, in a detailed way, the investigation reports are drafted. Okay. Now, when I talk about investigation, as I said, there are two types of investigations: statutory, non-statutory. When I talk about statutory investigation, investigations which are required to be done under the law. When I talk about non-statutory investigations which are done on the basis of, third party hiring someone, that, it is not done under the law, but it is done on the basis of the requirement of the parties. So these are the two type of these investigations. Now, when I talk about investigation, whether it's a statutory investigation or a non-statutory investigation, there is a process to carry out the investigation. There is a process and there are few things that we first understand as a baseline for the investigation. Then we will go on the bifurcation between statutory and non-statutory. So can anyone tell me how will you conduct an investigation? Tomorrow, if you are being appointed to carry out an investigation, how you will do that? How you will carry out a particular investigation? Anyone? How you will carry out the investigation?
Sir, firstly, we need to understand what is the purpose behind the investigation.
Yes. Very good. Then what? Second step?
So engagement terms of agreement, that the planning, execution, everything will be involved there in the investigation as well.
Okay.
First, we need to understand the entities, environment, nature, and the investigation, why the investigation is initiated.
Yes.
In that particular, say example, if the investigation is due to fraud, in which area the fraud is already identified, from where they have to first what is the factor for fraud. The factor needs to be further analyzed in depth, end to end.
Okay.
It depends on upon that the investigation, why it's conducted, or investigation with respect to the incoming partner or management, or investigation due to the government as per the central government order, or fraud serious obvious, like that. It depends upon the situation to situation, it will vary.
Okay. Okay. Very good. So when I talk about basically investigation, okay, first of all, we need to understand when I talk about investigation, as I said, it's specific, precise to the subject matter. You need to understand the objectives, why this investigation is being carried out, what is the outcome that each and the person who is hiring you as an investigator wants or the inspector wants from you. So what is the objective of that investigation? What is the outcome that they are expecting? Now, this outcome or objective will give you the answer to a second question. What is the scope of investigation? let's say whether they want an outcome or objective is to establish whether this particular related party transaction has happened or not. Then in that case, the scope will be the related party transaction of that particular financial year or subsequent, or 2 financial year or 3 financial year or whatever it may be. So the objective outcome will give you the scope of the investigation. The first and very foremost and important step: define the objective and the scope of investigation. Then, second step, the way we do the audit. Similarly, once you have the objective and the scope, the thing we do the audit is the planning. Yes or no? We plan for the investigation. Over here, we will prepare investigation program. Once objective is determined, scope is determined. Based on the objective and scope, you will create a plan. You will formulate a program of investigation. Okay, that how investigation should be carried out, which will contain the nature, timing, and extent of investigation. How much time you will devote, what are the things you will check, how many resources you have. Okay, nature, timing, and extent of the resources, everything it will be contained. Once you do that, once you formulate a plan, then what? Simple, go for entire financial statement.
No, sir, we cannot rely upon the auditory financial statement existing.
Okay. Can anyone else? Can I rely upon the audit report?
No, sir. See, what is again? We have to look at what is the objective and scope of the financial report, the investigation. If it is an investigation is pertaining to that financial reporting framework itself, then how we can rely upon it? It's not possible.
Okay. Okay. Now, see that what happens is when we are talking about investigation, if the subject matter of the investigation is the financial statement, that means investigation is required to be done to verify whether financial statements are appropriate or not, or is there any fraud in the financial statement. Means the question on the genuinity of the financial statement is doubt. Okay, there is a doubt on the financial statement. You should not rely on. However, if the subject matter is not the financial statement, but the other financial transactions, like financial transactions which may not be reported in the financial statement, in that case, yes, you can rely on the financial statement. For example, related party transaction. I want to do an investigation to understand whether the related party transactions are done on the arm's length price or not. For that, there is no question on the genuinity of the financial statement. That means I can rely now on the financial statement to get the value of related party transactions. Because the question is not on the financial statement. The question on the arm's length price of the related party transaction. Yeah, if there is a TP audit report, that may come into a doubt. I may not rely on that because that's the subject matter of the investigation. Okay. Or let's say investigation into a particular series of transaction, money laundering. There is no question on the financial statement. I can rely. Till that time, the subject matter or the scope or the question or there is a doubt on the genuinity of the financial statement is there. Like till that time, is there the scope is financial statement, the genuinity of the financial statement are in doubt. Okay, the question is financial statement. You should not rely. But the moment it is beyond that, it is not related to the financial statement, you can rely on that. Clear? Okay. I form my opinion of investigation on the basis of the opinion of the parties which are there in the investigation. Let's say things are not there, like, transactions are not present. Can I issue that in my opinion, I think this have happened? Because transactions are not there. Okay, records are appropriate not there. I am issuing a disclaimer, but at the same time, I'm issuing a disclaimer of opinion that as per my understanding, the transactions are not there, no information was available with me. I'm issuing this might have happened. Based on the missing evidence, missing information, limitation on the scope, I am issuing an opinion. Is it fine in the investigation? Or how many types of opinion are there in investigation? The way we have, unmodified opinion, then we have a qualified, adverse, disclaimer of opinion in audit. How many type of opinion we have in investigation? Come on, guys. How many type of opinions we have in investigation? Even if you say one type of opinion, that is wrong. In investigation, you are not there to issue your opinion. You are there to issue whether that has happened or not. Factual findings.
We are issuing only, yes, sir. Only we are issuing the factual findings, not
Yes.
the report conclusion.
So there is no opinion required from your side in the investigation. What is required is the factual findings. That means you are required to provide details whether a particular transaction has happened or not. Don't issue an opinion. Qualified, modified, not present. Sorry, not required. You are not required to issue opinions in investigation. So it's not the opinion based, it's the finding based. Can I perform investigation on financial projections?
No, sir.
Can I perform investigation on financial projections? Anyone else? Yes, no. So generally the answer for this is no, you cannot. Okay, you cannot perform investigation on the financial projections. Okay, reason because investigation is about the fact finding. Financial projections are not a fact, they are the assumptions. How you will do the fact finding in the assumptions? Tell me. Not possible. Yes or no? Possible or not? So, investigation cannot be carried out on the projections. Not allowed. Okay. If you try to carry on investigation of the projection, it is a blunder. It's not a fact. they are already assumptions which lacks the facts. Okay. So these are some important points on the investigation. So we have seen 100% verification in the investigation. We can put reliance on the audited statement, provided the question is not there on the reliance of the audited statement. Okay. The question or the subject matter is not the financial statement. Then I can take an expert assistance in the investigation, the way we can take an audit. In case of conflicting claims, again, my answer, if there is an investigation for disputes arising out of conflicting claims, in that case, the outcome should be based on the factual findings, not should be prejudiced to any appointing party. Okay. Opinion. As I said, do not express an opinion. You are not required to express an opinion. You are not there to express an opinion in investigation. Okay. That the investigation is a fact finding. Establish the facts and nothing more. That's it. Futuristic statement, should refuse to investigate the futuristic statement because they lack the fact. And working paper, that depends upon the type of basically investigation. Let's say if the investigation is a statutory where laws allows you, you can. Sometimes you are required to submit all the investigation working papers at one place for the government departments. So you can submit a copy, you can retain a copy. So that depends upon what things you can retain with yourself with respect to the investigation. Okay. So you can retain the copies of the investigations working papers. Okay, that is allowed. But again, that depends upon the person who is hiring you or the terms and conditions of the investigation. So these are some special points on the investigation, and we saw some specific with respect to the process of the investigation, that is scope, objective, program, examination, analysis, and reporting. Okay, so OPR. Clear? Any doubt till now? Any doubt? Okay. If no doubts, in the next session, I want you guys to read the rest of the chapter. Investigation, types of investigation that we will discuss. Okay. What are the types of investigation, which basically are divided in two categories? One, which is statutory. Second, which is other than statutory investigations. Okay. And there are some areas how these investigation in these areas is required to be done. We will discuss that. So this is statutory, non-statutory. And then we will dwell into some areas after going with this particular statutory investigation requirement. Then after doing the investigation in statutory, non-statutory, we will look into type of frauds. Okay. With respect to the investigation of frauds. So what are the types of fraud? Which are the, 3 types of frauds are majorly there. So we will discuss the types of fraud. We will discuss some of the fraud examples. How investigation for the fraud is done. And then post that, we will go for the indicators of fraud. The fraud triangle theory, the fraud diamond theory. Okay. So indicators of fraud. Fraud diamond, fraud triangle. So you need to go through that. And then after the fraud indicators, we will go to the forensic accounting. Okay. The details of forensic accounting. What is forensic accounting and how it is carried out? What are the forensic accounting and investigation standards? A few things on that particular part we will understand. Okay. And that will be the basically in chapter number 17, then in the next session. So I want you guys to read the chapter rest of the part. Types of investigation, indicators of fraud, fraud and forensic fraud and types of fraud, then forensic account. These are the portions we will discuss in the next session on Wednesday. Okay. And before we close the session, I have a few questions to discuss, quick questions that will help us to revise the topic what we have taken today. Let me bring it up. Okay. So these are the quick MCQs where you need to answer. Okay. First, due diligence broadly implies a general duty to exercise dash in the transaction, in any transaction. Authority, care and prudence, speed, or statutory power. B, care and prudence. Very good, Sanjay.
Care and prudence.
Yeah. What is the difference between audit and due diligence? Audit is voluntary, whereas due diligence is mandatory. Audit aims to express an opinion. Due diligence aims to examine a potential investment. Audit is specific and narrow. Due diligence is broad and general. There is no difference.
B, sir. Again, B.
Yeah, very good. B. Which type of due diligence involves an evaluation from the commercial, strategic, and operational perspective? Very good, Sanjay. See, the name says commercial. So, commercial due diligence. While conducting due diligence, letter of comforts given to a bank by a target company are often categorized under which area of investigation?
Hidden liabilities.
Very good. They are the hidden liabilities because they are letter of comforts, not yet, a kind of invoked or something like that. So when is a detailed due diligence typically conducted? After signing the binding contract, before deal is discussed, after the acquisition is fully complete, after the preliminary understanding is reached, but before signing, prior to the signing a binding contract.
A. After signing the binding contract.
No. Due diligence is typically conducted after a preliminary
D.
understanding is reached. You
D,
do
sir.
not enter into a contract of deal. Like contract here means is the M&A contract. You do not sign the deal before, you do not sign the deal till the time your due diligence is done. So you reach to a preliminary understanding, but before you sign a binding contract for a M&A, for acquisition or merger, you carry out a due diligence. Okay, so when I talk about preliminary understanding, that is recorded in the term sheet. Remember, where we have the requirement of the due diligence. The correct answer is D. Clear? Any doubt? Any doubt? Okay. If no doubt, then thank you guys. Thank you for participating in today's session. Please read the chapter before next session. Please. Okay. Thank you. Thank you for participating.
Thank you, sir. Good night, sir.
Thank you. Good night.